Afternoon all, how are we doing? I just bought myself a new Lambo. Back testing the new opening range breakout pre-market 5-minute strategy. Looking pretty good. Looking very healthy. Just watch this little graph down here for a minute. Very interesting. I'll just have a cup of coffee while it generates 50 grand or so in a month. I've modified it. I haven't out of sample tested this, but not looking bad, is it? You watch it collapse now. How are we all doing? Afternoon, Steve. Bad weather. Grr. Really nice weather here. Afternoon, Crom. Afternoon, Diamond. Virginia. It's time. Baggy. Brian. Cyril. What capital? What capital what? So it does have bad runs. Same as any... Whoa, what's going on there? Freeze. Oh, it's the end of the test. I've only put it on a little one. Oh, that's why. Oh, God. But anyway, yeah, it's doing all right. So I've just tweaked it, basically. So we were talking about this morning, by the way. If you weren't here this morning, go back to this morning, have a watch of that. But I have now got a second entry. So it splits the entry into two. So we can now have two TPs. One TP for the first part of the trade and a different TP for the second part of the trade. This will speed up backtesting for me as well. And I've changed the break-even stop to work on a percentage of the opening range. So if we have an opening range of 150, we can also break even when that first TP is hit on the second trade. And we have separate trailing stops for each entry as well. You're not going to need more than two. I wouldn't advise having more than two. So. But anyway, it's looking good, promising. Still got lots of testing to do though. Right, let's have a quick overview of yesterday, as usual. ADR reversal strategy banked 1.02 yesterday. So far, 0.72 banked today. We've got a few ADRs today. We'll go through those in a minute. So it's just taken a couple of trades this morning on these new ones. US dollar yen is the only one that it's in at the moment. Hasn't managed to get any progress on. But pretty good. 0.72 bank today. ADR reversals. I closed out manually that pound yen trade because it sat sideways for 4 days. So that's that loss. It's sitting in 0.25% profit at the moment. Not going anywhere. Banked 1.21 yesterday. H4 M5 mean reversion strategy banked negative 0.12 yesterday. Did a little bit of drawdown control. 0.65 bank today. 1.78 drawdown. EuroCAD is the only one. Oh, and US dollar yen. EuroCAD and US dollar yen are both round about the 1% mark. We will bank some more profit on that today, so we'll do some automatic drawdown control on those. I think it has been anyway, hasn't it? Probably. No. No DD control done on those. Let's check that a minute. That US dollar yen and EuroCAD. Oh yeah, it has been. Oh right, yeah, okay. Has done drawdown control on it. Hasn't done it for days because we're literally sitting sideways. So that's why it's not done any. It's been sitting in that for ages. H1 hedging banked 0.31% yesterday, 0.74% so far banked today, 7.87. It's pretty much the same. We were sitting at 8% drawdown this morning. We've just banked 0.75%. So all doing well. So we're on 24% for the month on the hedging strategy, 14% on the month for H4 RSI mean reversion. H1 mean reversion is 20% for the month. And ADR reversals on 9.83 for the month. That was really slow. We were sitting on 2 to 3% after week 2. So we've managed to get some progress on that, which is nice. Right. News. We got 4 minutes to the open. I've just gone over to the yellow calendar because we had a massive movement on the Canadian dollar, and I wonder what caused it. And it was the PPI figures for the Canadian dollar really rallied the market today. Massive hit, 2.9%. So this is the manufacturer's price index. Raw materials price index, which is to do with manufacturing. Yeah, so it's manufacturing raw materials price index. So yeah, big movement off of that. So I went over to yellow just to see what actually caused that this morning. So 245, we have PMI figures for the US dollar. The pound PMIs came out both as negatives. So not good for the pound. If you have a quick look at the pound, for example, pound US dollar, we had a rally down and it's pushing up at the moment. Wow, that's really pushing up at the moment, isn't it? So the pound taking absolutely no notice whatsoever of the news. But US dollar we've got at 245. So if you are trading the opening range breakout strategy today, I would be very cautious. So the first initial cash balance, as we saw on the DAX this morning, DAX was a nightmare sideways mess today. So we had news on the DAX this morning, and that's what happened basically at the open. Yeah, so just be careful. We're likely to get a lot of whipsawing at the open. So if you're going to be trading the opening range breakout strategy today, up to you if you want to try it. Try the pre-market, try the 5-minute ORB or whatever you want. But the 15-minute opening range is when that news hits. So if you wait for the first 15 minutes today, take that range. When the news hits, if we get a break on the news, that's the one you want to take because that's one that's going to move the market. So just be careful today with that. That's for the DOW or the DAX, the DOW, the NASDAQ, and the S&P if you're trading the S&P or the Russell or whatever. Lots of talk from the Fed, lots of talk from the ECB this morning. There's that PPI figure, look. So made a big move that did. Doesn't normally. Other news this morning, we had Bailey. We are nearer the peak of interest rates. Doubt it. If the US aren't near the peak of their interest rates, if they say they're near the peak of the interest rates and they're getting on top of inflation and they've decided, actually, no, we might put it up more, I don't think Bailey's got a leg to stand on saying, oh, actually, I think we're near the peak. No, we're not. Inflation is still at 10%. That's going up. We're not at the peak of the pound. If we are at the peak of the pound, we're in massive trouble. Anyway, so apart from that, there wasn't a massive amount of news. Bailey was talking this morning, but that's really all that came out of it. The IMF, interestingly enough, came out and said that we're going to miss recession this year, which is good. We were forecast to go into recession. So manufacturing PMIs and everything, there's the news that we had this morning. So that's the news for today so far. Market is open. So there's your 15-minute pre-market. There's your 5-minute pre-market. That's your break to the downside. So you've gone short if you're trading the 15-minute pre-market or the 5-minute pre-market. I get the feeling what we'll probably do is push down a little bit and then we'll probably retrace back up again, and then we might do a little bit of a whipsaw like that and wait. So we'll see what happens, but I'm not expecting a massive move out of this morning or this afternoon. NASDAQ gradually collapsing all day, look. So your 5-minute pre-market on the NASDAQ has also broken to the downside straight into yesterday's low. So this line, dotted line here, that is yesterday's low, previous day's low, and we're at ADR. So good looking potential longs on the NASDAQ. So we'll just see where this goes for the first 5 minutes. Let me catch up on the chat. Afternoon, Tammy. On the EA running, what capital? Oh, on the EA that was running, I think that was 100 grand. Don't know. Yeah, 800 grand I normally run my tests on. Yeah, 100k. Okay. So a whipsaw on the NASDAQ this morning on the pre-market 5 whipsaw. So you triggered short, gone long, stopped out your short, going long. Probably the same thing's going to happen here. Looks like it. So there was an opportunity to make money on the NASDAQ on the 5-minute pre-market. You've got your 1.5 hour. This is the exact strategy, basically. Stop out on one, make money on the second. As long as you're making 1.5 hour at the open on the first 2 trades, you can't really fail to lose money. Big rejection to the downside. So let's have a quick look at where we're going on the Dow and the NASDAQ. So the NASDAQ, obviously, we are stuck on day 3 now, sideways. We've just tapped into yesterday's low. They've bought that up immediately. Previous day's low is just below that. We are already at ADR today as well. So potentially we might go into rotation today. If we do break yesterday's low and run into the previous day's low and break that too, there's nowhere to stop really until we get down into this accumulation, which is 200 ADR. Bear in mind, we've got the figures coming out at 245 for the PMI figures for the US. If those come out massively positive, we could well have a drop on all indices. So there is potential for this to do a couple of hundred ADR, because obviously we are down at ADR already, but we'll see where we go. The Dow, we are a little bit different on the Dow. We're stuck in, we've just filled that propulsion gap, but we're kind of stuck in the middle of this wider range at the minute. So this has got lots of movement to the upside. Downside, we're looking at just over ADR down into last week's low. So upside wise, obviously you've got propulsion gap targets to the upside to fill. We got this big blue block here. Oh yeah, it hasn't filled, is it? Sorry. So that's this propulsion gap. It's absolutely vast. Look, that's off the news. So this big one that we've tested multiple times. So kind of ignore everything up there, really. There you go. So there's your whipsaw. Just tapped out the high of that pre-market 15 and now putting back inside. So yeah, Dow's got plenty of room in both directions. So very difficult to call what we were going today. We'll have to wait and see. Afternoon, Sean. Afternoon, everybody else. Colonel Pinecone. I'm long Aussie dollar CAD. Okay. Good job. ADR reversal. M5 reversal alert. Off of ADR. Very good. Watch that level. Those propulsion gap fills and that accumulation break there. Got a terrible ping. Terrible ping to Robo Forex for some reason. I don't quite know why. Right, so there's your 5-minute opening range break. Opening range in. So it's absolutely huge. Highly likely we're going to stick within that opening range. So don't get too excited until 245. Afternoon, John. Afternoon, Neo. Afternoon, AGB. The one that you are testing. Yeah, it's the one that I was testing. That was 100K. That back test. Right, so let's have a look at ADRs while we're waiting for the news. We've got 10 minutes to the news. So there's a few ADR hits today. Aussie dollar CAD we're looking at now. So that's a nice hit down to ADR low. Big drop down on that. This is the movement of the Canadian dollar. Like I said, we had that big strong move on the CAD. It's all bouncing very nicely off of ADR. So that's a nice reversal there. Your entry is here. There's a big strong push up there. So your entry's there. Third of an ADR to half an ADR is 28. So half an ADR takes you back up into that propulsion gap. So back up into kind of where we broke out this morning. A third of an ADR is going to take you up into that accumulation for a target. Euro CAD. Sorry. EuroCAD, just saying I've got EuroCAD long on. This was an absolute beauty. Look at this. Straight down, ADR to the pip. Reversal alert, off we go. So all this movement on the Canadian dollar is all undoing. So it looks like we're getting a V-shaped recovery. So if that's going to happen, you're looking for the origin of the move, basically, for a pullback all the way up to there. So this one's not far away from hitting target, actually. Euro CAD, very close to actually getting out already. But yeah, so looking for a pullback up into that propulsion there. If you look at it on the hourly, we've got a propulsion gap. Oh no, we're not going to get a propulsion gap because it's just going to fill it straight away. Look, I was going to say there's going to be a propulsion gap off the back of this move, but that's what it is at the moment. It's that big. So if this just does that complete bullish engulfing, you had to be in it pretty quick. Pound CAD, very much doing the same thing. Already done it, bullish engulfing. Are we already out of that? Did I even get into that? Yeah, pound CAD in that one, just on the verge of hitting target on that as well. So yeah, your ADR reversal, straight off of ADR, basically. There's your entry there. This thing's absolutely flying. New Zealand dollar CAD, same thing. So all these CADs are unraveling at the moment. I'd be a bit cautious about potentially this just being a pullback on a new leg down. I'm not quite sure why this move is so strong on the Canadian dollar. The US dollar is rallying as well. So the US and the CAD all both rallying together. So New Zealand dollar CAD, that one hits 125. Came off of 125. Entry's just gone in there. So again, that's where we kind of broke from. So if you're going to do a V-shaped recovery, you should at least get up to there. Hourly propulsion gap. Fill. New Zealand dollar yen has just hit ADR. There's a lot of movement going on at the moment. Let's look at New Zealand dollar US dollar first. So New Zealand dollar US dollar, nice big drop down. M5 reverse alerts just triggered on that one. Long. That one's just potentially putting in the start of the second leg. Potentially, though, may continue down. New Zealand dollar yen. That's just hit ADR, so your reversal alert is there. So you're sort of 15 pips away from an entry on that one. 44 pips is half an ADR. Loads of them. So putting back up into that accumulation there, really, I would say. So lots of ADR reversal opportunities. RSIs, flat as a pancake. There isn't any. So there's no RSIs to look at all today. Everything that we were talking in the Telegram group today about it being quiet. You're going to get quiet weeks where you're just not going to get any signals. It might take a trade or two. Look at the H1. Yeah. H1's banked 1.47% this week. It's got literally two trades on two currencies. That's it. There has been nothing this week to get into. Everything that we've got into is all played out. So we're just sitting there. You can't bank money if the market doesn't move. The market is what determines whether you make money or not. If it doesn't move up and down, there's no opportunity. There's no trades. That's it. You sit there and wait. Nothing you can do. There's no point in trying to force a trade. Forced trades are usually terrible. So nothing we can do on it. It's banked 20% this month. Let's sit here and twiddle our thumbs until something happens. So hopefully we get some movement in 5 minutes off of the US dollar PMIs. Once they're out of the way, tomorrow morning we've got the New Zealand rates, and then we've got CPI and FOMC tomorrow, then unemployment. So today, really, this news at 2:45, if we don't get a load of movement in the next 5 minutes, nothing much we're going to do, really. Just have to sit here. So if you've got anything you want to discuss, let me know. Otherwise, it's going to be a very short live room. But we will watch the Dow, and we will watch the Euro US dollar and see where we go. So all the ADRs basically are playing out at the moment. We're just waiting. So inside bar on the first 5 minute opening range. So this 5 minute opening range here is also your 15 minute opening range. Yeah, so you've got inside bar, and now we've got an inside bar and an inside bar. We've got 3 minutes left. So yeah, waiting for a break of that level to see if we can get some movement. Afternoon, James. Afternoon, Dreska, Amar, Jason, may I know the reversal EA presets? Which one is used for reversal alert, the mean reversion? So all these presets here are on the blog post linked from the EA. So if you go to, well, I say not all, virtually all the mean reversion set files are on the website. You go to the EA page on the website. There. There's a link to starter set files and test results. Yeah. So this gives you the basic strategies, ADR, reversals, that's the hedging set file, M5 hedging. I'm using H1 hedging at the moment, so just run it on the H1 time frame. Yesterday's high-low, mean reversion. So that is either H4 or M5. But if you're in a Telegram group, go into the Telegram group. There's links going on the bottom. Telegram in a minute. It will come up. It will scroll along in a minute to Telegram. In the Telegram group, in the files section, if you search for Lee, you'll see the actual set files that I'm using at the moment, which are virtually the same as the ones on the blog post, just slightly tweaked. So the only things I ever tweak are targets, drawdown control and spacing. Apart from that, it's pretty much the same. They're all in the Telegram group. Okay, 1.5 minutes. Afternoon, Segar. No, we hate short live rooms. Well, there's nothing really to talk about. Development of the new EA. It's basically all I'm doing at the moment. Well, not the new EA. I'm just redeveloping the M5 strategy. There's not necessarily an edge in it yet. I don't know. I've got a lot more testing to do. It seems there is, but until I've done out of sample testing, I can't really say. So I haven't actually done too many permutation tests, because obviously when you've only got 18 parameter tests and they're all profitable, it kind of says that the strategy is sound, because there's not much you can test on it. It's basically a case of get in when there's a 5-minute break. Where do you get out? That's it. There's only two things. Let's get in when there's a 5-minute break. Let's get out at some point in the future. That is the system parameter permutation test that I've done. All 18 variations passed. So, you know, when you see a strategy that simple, literally, when a line gets crossed, go in one direction and then get out after a distance is achieved, it doesn't get any simpler than that as a strategy. So when you run every permutation that you can on it and every single one of them makes a profit, it's not really anything you can say that, oh, it's not going to work because of. It just works, doesn't it? So I need to verify it, though, across different time frames. Okay, so the news is out. Again, different time frames. Again, different time periods, rather. So we got a 55.1 off of a 52 and a 48 off of a 50. So one hit, one miss. So negative manufacturing, positive services. Services is a positive 3% or 2.5%, and we're negative 1.5% manufacturing. So that should be bullish overall for the US dollar, which you would expect to be negative index. Lots and lots of big spreads going on at the moment. Lots of volatility coming in. A lot of volume. Not a lot of movement, though. So it's certainly bullish US dollar. Euro US dollar is starting to come down. We're down at this double bottom potentially as well. So last week's low is going to get bought up if it does rally to the downside. So we might find we don't actually make any progress off of this today. Amy, I'm confused. I can't enter all those beautiful ADR trades because there is no extended RSI in H4. ADR has got nothing to do with the 4-hour RSI. Totally different strategies. ADR reversals does not use RSI in any shape or form. ADR reversal is an intraday strategy based on the average daily movement. So ADR reversal strategy is literally as simple as when the price moves beyond its average daily range, which it does 42% of the time, we wait for a sign of strength, in this case, because it's an ADR hit to the downside, in the form of a reversal alert, and you literally just get in. That's it. There's no RSI involved. Don't even look at it. Doesn't matter. There's no H1, no H4, nothing. It's just ADR reversals is just that. H4 M5 or H4 M15 mean reversion strategy is 4-hour RSI extension. When you get an extension on the 4-hour RSI, then you drop down to M5 and you take the reversal alert. You don't worry about ADR. It doesn't come into the equation. Two totally different strategies. Again, go onto the website. Go to strategies and you'll see them both there. So mean reversion trading strategy, that covers that. Basically, mean reversion is trading strategy is multi-time frame mean reversion. So you're using either the H1 as your higher time frame or the H4 as your higher time frame. So this is where we monitor RSI. We wait for RSI to get extended on those time frames. When RSI is extended on those time frames, we then drop down to the entry time frame, which will either be M5 in that case, or M15 in that case, or M5. I'm using M5 actually at the same time. It doesn't make a lot of difference. And you take the reversal alert on that time frame when that extension is in play. Yeah, so it's all explained in that one there. ADR reversals is there. ADR reversals has got nothing to do with RSI. It's a scalping strategy, so it's literally scalping M5. But it's also turning those scalps that fail into position trades. So if you wanted to, you could wait for RSI to get extended before you take an ADR reversal. But basically, then you're just trading H1, M5 mean reversion, aren't you? So just stick with that one. A lot of people don't trade that because you will get into more drawdown on it and sometimes more squeezes. However, because I am targeting a smaller amount with it, a third of an ADR, you get out very, very quickly. Hence why the ADR reversal strategy just banked a bit more. Look, has only done 10%, whereas H1 mean reversion's done 20%. Because you will get in and out more times with this one, but your targets are smaller. You're banking less money. Not by much, but no. Okay, so we've broken to the upside on the Dow. You've got a retest on the reversal alert on Euro US dollar, but it's total whipsaw alert. Market hasn't really got a clue what to do with that news at all. It's bullish and bearish, so hence whipsaw. There we go. Jason, I am a new buyer for your indicator. I'm not sure why it didn't trade much as you did using the presets. Don't know what you're using. David, I'm surprised you're not testing the trend pullback set file. No, I can't run them all. I don't use the trend pullback. But if you want to do it, all it's going to do is filter out some trades. At the moment, most of the markets at the moment, as you know, are quite subdued and quite sideways. So there's, if you're trading in line with trend, basically, the problem with the trend set file is if you get a pullback below the RSI, below the trend line, yeah, like that, it will take a short there. So and I'm not a trend trader, I'm a mean reversion trader. So if you want to trade in line with the trend, as mean reversion, you're going to get less entries. But, you know, I come back to this Aussie dollar, New Zealand dollar example all the time. That was the trend pullback entry. At some point, it is going to change, and it doesn't matter whether you're using these moving averages or not. If the market's going to switch trends on you, you're going to get into the same thing. So my theory is, you know, just take the trade, regardless of what the moving averages are doing. If you want to be safer, use a higher RSI level rather than a trend direction, because trend direction changes all the time. When you've got a pair that's choppy like this, like you're taking shorts only all the way up here, so you're missing all the long mean reversion trades. Up here, you're taking longs only, but it collapsed. So you flipped short only, then it pumped. Now you're flipping long only and waiting for an extension. You didn't get one. So then it collapsed down here. You missed that one because you were only looking for longs. And then it went down. You see what I mean? All it does is it filters out opportunity. So although the strategy works very well in normal trending market conditions, we're not in normal trending market conditions at the moment. So, but there's nothing wrong with it. You know, alluding to what I said this morning in the Telegram group, it doesn't matter what entry you take with what strategy. The market will go where the market's going to go. And if you're getting in on a set of rules, you're getting in on a set of rules. What happens after that set of rules is executed is entirely up to you. So if you want to use that, then do it. If you look at the trend one, the trend pullback testing, look. Very nice equity curve. But then so's that one, and so is that one. But the thing you'll notice that's different between these, yeah, is down the bottom. Look at the number of trades. Yeah, look how far apart those trades are on the trend pullback strategy. And then look at how many trades you get on the mean reversion. That's yesterday's high-low. I actually see the number there. 57 as opposed to 37. Yeah. So what you're doing is you're filtering out potential profit. Sometimes, but sometimes it'll work, sometimes it won't. I just like it being simple. So, yeah. Same with yesterday's high-low. That's a great strategy, but much better, in my opinion, as a stop-loss strategy than a position trading strategy, which is why I don't trade it. This is my bread and butter. This is what I've been making money out of for years and years. That's what I stick with the vast majority of. And that kind of plays into that, because when you get one of those, most of the time you've got an H1 RSI extension as well. So these two will take very, very similar entries. But there's no right or wrong. It is just whatever it is. Trade what you fancy. I just can't backtest and not backtest, can't run every strategy live. It's just, there's too many combinations in there. Right, so your opening range breakout is to the upside. Not very convincing at all. This thing's got no idea where it's going. So there's your new spike. You've got an inside bar on the new spike at the moment. We have put in a higher high on the Dow. NASDAQ is bullish. EU bug wiki certainly is. Oh no, I'm long gold. I don't think you got to worry. Gold is a beautiful long. We looked at this morning. So this is last week's low. We've basically tapped into previous day's low this morning, and we're off. So there's way more upside potential on this than there is downside. So I'd much rather be longing this than shorting it. Also, because of what's going on with the debt crisis in the US, if it does default, there's nowhere for this thing to go but down, which means gold is going up. But we don't know. We don't know what's going to happen. Afternoon, Anna. If I want to use every strategy to trade on the currencies, I have to open 5 different strategies in every graph. Yep, if you want to. I wouldn't recommend it though, because you're going to massively over leverage yourself. If you're going to run every single strategy, I would run multiple accounts. A little bit like I've got running here, yeah, on this VPS. So you have 4 different accounts. That one's ADR reversals. This is H1M5. That's H4M5. This is H1 hedging. Yeah. Because you're going to get the same trades taken on some cases. So you're going to massively over leverage yourself. So you will get hurt. US dollar yen. If there's any pairs you want to look at, let me know. So US dollar yen's just coming straight off of today's high, which is last week's high, previous day's high. Just all this high here. It's not able to get past it. So that strength in the US dollar that we just had has kind of waned a little bit. So doesn't look good for the US at the minute. Looks like it's dropping, doesn't it? US is coming down. So you should get a decent rally off the Dow, hopefully, today. So yeah, US dollar yen high. There's no entries on this. The last entry on this for me was there. Out. So at the moment, it's just kind of sitting in the middle of nowhere, 3-day sideways. It is a support resistance area, though. So it's good, much better for shorts than longs. Your 5-minute reversal alert was this morning. Nice M pattern reversal off of last week's high. We've just retested it and just taken that liquidity. So it may well run to the downside, but no advantage really either way at the minute. So there's no real reason to get into that one. 4-hour RSI extension, it was. Not anymore. So nice divergence on that. Bearish. So looking for just a profit take move on that push, pull back, and then potentially rally. But again, US dollar, we have no idea if this thing's going to collapse. So the Fed are giving really mixed messages at the moment. So difficult to tell. BlackRock's reader, the Fed is likely to pause at the June meeting. So again, more talk of no rate increases. Yeah, we've had talk yesterday of potential rate increases. You know, just completely misinformation coming out of the Fed. Congratulations on hitting the 9K. 9K? Oh, subscribers, all right. So I have. Look at that. 9,000. Look at that. 537 videos. Blimey. Yeah, 9K. That's pretty good. There's not many people out there with 500. It shows you how little marketing I do. And compared to all these guys that have got Lambos all over the screen who have like 100,000 subscribers and 25 videos. Whereas mine's all lots of videos and nobody even bothers to look at them. Hey, but we don't care. We're in here making money, aren't we? Which one is your lovely strategy? All on the website. Go to the website. Watch the bootcamp, basically. This is how I trade. Everything you need to know about how I trade is in the Position Trading Bootcamp. You can just watch all this. It's all on YouTube. It's all on the website. If you've got foreign language, it's all now transcribed as well. So you can convert it into your language when it loads. So this is the video transcript. This is me waffling. And that's the bootcamp. So go and watch that. That explains how I trade. And then if you like the way that I trade and you want to trade the way I trade, I've got indicators that will help you. You can also trade it manually. You can convert position trading, what I teach in here, into any strategy. So if you've got a strategy at the moment that uses mean reversion, you don't need to use my strategies. You can use any mean reversion strategy. It'll work with Bollinger Bands, any oscillator. Although I wouldn't use any other oscillator, but that's just me. But I don't use stop losses. I just get in and out when the market moves. So go and watch that. And then there's an EA which will automatically trade it for you in the way that I trade. Obviously, you can build your own if you want to trade some other way. Jaroslav, please tell me your thoughts on pound yen. So pound yen is very much the same as the US dollar yen. We've just stalled out for a few days here. We have got that high from 2 weeks ago. That's last week's high. We're just sitting there at the minute, up above the previous monthly high, which is that level there, which is a bit weird because it's a Friday, but it's in an uptrend at the moment because the yen is weak. We are expecting some strength on the pound moving forward. We are expecting, although Bailey's just kind of put the dampeners on that this morning, saying that he's probably not going to. We might be hitting terminal rate. I don't think we are, but we might be. So difficult to tell. But if we get some weakness in the US dollar, so if the US dollar does default and the US dollar weakens as a result of that debt issue, we will get money coming out of the US dollar. Typically, when the money comes out of the US dollar, it flows into safe havens, which are the Swiss franc and the yen. Okay. So if we do get that negative US movement, there's a high probability that we'll get yen strength because money will flow into the yen. So that would be coming down, but then everything would come down against the yen, especially the US dollar yen. If you want to get short on something against the yen and you're thinking, what's the best thing to trade at the moment? Assuming that the US is going to go mad and everyone's going to jump out of it, this is the thing that's going to move the fastest. Or the US dollar Swiss, either or, one of those two. US dollar Swiss is obviously in a downtrend at the moment. Swiss franc's stronger than the US anyway. So, but right now we're sitting up at the highs. There's no entries on H1. Yeah, that was the last one here. Sorry, we're looking at the pound yen, weren't we? Gone over into US dollar mode. So I did have an entry here on the pound, which I manually closed out today. We looked at this one this morning in the live room, and I said, you know, this is when I got into this, H1M5 massively extended, lovely short. We've sat sideways now for 3 days into day 4. So I got out of it flat because RSI is flat. The opportunity's gone. They did not do the move. They may well do the move, but better off just being out of it. It's not going anywhere, is it? And today, all we've done is push down and push back up again. So we're tapping into this high. They're rejecting it over and over again. Every time we hit it, there's a limit triggering. There's another limit triggering today. This could well be the reversal alert that actually goes, right, fine, we're off. And when we push down, it's going to need the yen to strengthen up. The pound news today, obviously we had the PMI figures coming out. Everything was negative for the pound. Push down, pushing back up again. So there's nothing. There's no volume. There's no reason to get into anything here. This could go absolutely anywhere. So just leave it alone. RSI dash is my, if you could do the bootcamp, RSI dashboard is my crux. Basically, this tells me when there's opportunities in the market. If something's been pushing hard, I'm expecting a pullback on it. So that's what I'm doing, getting in on the pullbacks. The profit take moves created by the banks. This tells us when the banks have done a move. When they've done a move, they need to undo the move. So there's, as you can see, it's completely flat at the moment. There's no signals anywhere. Pound yen being one of them. So yeah, nothing to see there. Smash the like, as Dureska says. How many people have got 64? How are the data for US dollar, Marion? What? Mixed. That's what you mean. Aussie dollar, US dollar has potential for a buy. Could do. No reason for me to get into it. I'd be more bullish than bearish on it right now, because we are obviously in a very this is the last month's movement. Basically, we're obviously in a range. We're down towards range lows. We've got a little propulsion gap target to the downside, potentially ADR today. So if we've got an ADR hit on that today, you could go long, target these propulsion gaps to the upside. If we hit last month's low, which is 125 to 150 ADR, that'd be a good long as well. But right now, it's not extended in any way, shape or form. It's not moving fast anywhere. So it could do that for the next week. It could do that for the next 2 to 3 days. But yeah, it's got potential for long. Targets is the upside. So the propulsion gap, as you can see, this is a really good chart for showing the propulsion gaps. So let's scroll out one more. Okay. So, you know, this is 1,500 bars ago. These were the initial propulsion gaps formed. Yeah. So the market pushed down, left all these propulsion gaps in place, came up, filled all those propulsion gaps, pushed down, came up again, pushed all the way down there, left all these propulsion gaps in place, traded back up, and filled all those propulsion gaps. And then it did all the ones on the way down, came up, left more, came down, up, down. You can see what I'm saying. Basically, the market, whenever it leaves a propulsion move, it typically comes and fills it. Where are the targets at the moment? Yeah, I would be long in it. However, if the Fed suddenly come out and say something along the lines of, hey, guess what? We've managed to solve the debt crisis. Everything's good. Oh, and we're going to increase the interest rates by another 0.5% over the next 3 months. That thing's going to go down and it's not going to stop. So those are going to get left behind, become what we call orphaned propulsion gaps. In which case, then you just need to readjust your targets for the next one. Or if it goes down further, the next one or whatever. So at the moment, yeah, more upside targets. But there's nothing really triggering me to get into it at the minute. Nice level this, though. Here, potentially. So we haven't hit it yet, though. So what you're expecting, these support resistance levels are drawn on the chart for a reason. And the reason is that there are limit orders there. So market participants, the large players, banks, institutions, funds, they will place orders at support resistance levels, limit orders. So they will be looking to buy up this level because that's where they bought it before. So if it comes back down to it, they will buy it again. Yeah, if it comes up to this area here, there'll be a lot of people selling at that level. Therefore, they will add to their positions and sell more at that level. That's why support and resistance works, and that's why ranges form, because it's what we call balance. So this is an area of balance that the market is happy to transact in. And then we'll have an area of price discovery where the market will try and see if it's possible to trade at a different level. If it is, it will trade at that level. If it's not, it will fail and come back into balance, which is what we call a false breakout. Yeah. So it's at the minute you're in equilibrium, in balance. Market will keep doing this until a participant says, right, let's see if we can get down to 0.65. And they'll attempt to go short. And if there's a lot of people that go, no, we like it here, that's what will happen. It's all down to how many buyers and sellers are in the market, who's got the biggest pockets. And again, there's nothing you can do about that. So if you go long here, target that level, you know that there's a high probability they'll come back there because that's what they do. Fine. If they decide to drive it down there, you just deal with that position and wait for an opportunity to get back out of it when they decide to pull back up. And again, breakouts. When breakouts happen, you usually get a retest of the level. So if, for example, we break out down here and you've gone long, you would scale into your trade and wait for them to come back and retest the level they broke out of. And either that is going to be a false breakout, price discovery that fails, and they'll pull it back in there. Fine, you're out. Or it will be a retest of the breakout level to see if the guys that sold through that level have got enough in their bank to drive it back down and have that price discovery pass. So balance, price discovery will either pass price discovery or it will fail price discovery. Yeah. And this is why we have market structure. We're testing whether or not we can trade at different levels. And the banks and institutions will push each other around to the levels that they're happy to trade at so that they can make money. And as long as they do that, it doesn't matter if you go long or short, does it? Went short there, went long there, went long there, went long there, went short there, went short there, went long there. It doesn't matter. As long as it goes up and down, I have no clue which way it's going to go next. But as long as it does go up and down, I've always got a way to get in and out of the market. So to answer the question, potential buy. Yeah. It's also a potential sell. So get yourself one of these bad boys, flip it, hit a button, and deal with it afterwards. What's your thoughts on oil? So oil's still not gone anywhere. Oh, yeah, it has. We've got movement. Right, so we're retesting last week's high and last month's high. So this area is last month's high. This is last week's high. That's last week's high, last month's. So we're back up retesting the high of the range. And again, same principle applies. This is balance. We will then do price discovery or not. Yeah, so it's either going to rally back down, fill the propulsion gaps to the downside, bounce, or not. But yeah, good level to start looking at shorts. Fundamentally, this should be a long. It's a commodity. Demand has increased by 3 million barrels a day. Supply hasn't changed. So therefore, if demand goes up, supply stays the same, prices have to rise, because if you want my stuff and there's more of you wanting it, I've got a set amount, so I'm going to charge you more. That's the way it works. Supply and demand. Commodities are all supply and demand based instruments, so they should work on supply and demand. However, oil seems to have a life of its own. So at the moment, we're looking at 95 to 107 a barrel this year, which is obviously way up here. Yeah, we're looking, forecasts are up here this year. So obviously breaking these highs and going long, but at the moment, we're not interested. So it does look like a rounding bottom. So it does look like we're starting to slow down. That peak formation low, we put in a new high, so the market structure has broken to the upside. So in theory, that's what we should be looking for. But we can't get any traction. Intraday, obviously, if you want to trade it intraday, highs and lows, which is what the lines are there for. So this is a rejection at the high. Trade it back down. Yeah, it's not going anywhere. Market's flat at the minute, really flat. Which is not a bad thing, because it means we're not in any pain, but it also means it's hard to make money. Albie, in Bootcamp, I think it was in Bootcamp or live, I don't know. You say that when you see an opportunity to trade, you load the EA manually. Do you do the same now, or you just let the EA run and watch all the pairs? Yeah, so basically on my accounts, all I do is I wait for an RSI extension, and then I whack the EA on it. So I've got a set file. Again, it's in the Telegram group. But this is the actual set file that I use on my account. I think I've probably got it on here. God. But basically, all I've got is a set file. So for the market reversal alerts EA, it's a set file. Instant entry. So it's this one, basically, instant entry. So all it does, literally, is it's told to get in for me on the next reversal alert. So what I will do is I will wait for an RSI extension on the 4 hour, yeah, or the hourly. At the moment, it's the hourly, is what I'm trading virtually all the time, because the markets are fairly flat. So I wait for an RSI extension to get to where I want it to be, usually above the 75 level, below the 25 level. And as soon as I get that alert, I will then open up that chart, stick the EA on, and just say, take the next 5-minute reverse alert for me. Yeah. So I pick and choose the trades that I get into. Every now and again, I will see something that I think that looks good. Oil right now. So I will see oil right now and I'll go, this looks brilliant. Just from a support resistance perspective. So drop down to M5. We haven't had a reversal alert on it yet. So I'll open up oil on my VPS. I will stick that set file on. And as soon as it gets that entry, it will just trade it for me and go short. And all you do is you use this. It's just a set file basically to say, get me in on the next reversal alert. All you do is you choose the direction. See that there? So long or short. So if this was oil right now, I'd be saying, take short signals. Literally, just get me in short. If it then trades that and pushes against me by 1 ADR or 3/4 of an ADR, it will just keep position trading for me in the direction that I want it to go. So it's exactly the same as the normal set files that I've got running on here. Yeah. So these set files on here on H1M5. Yeah, it's this set file, right? But all it is the RSI filter is turned off. The higher time frame RSI filter. So this is the H1M5 mean reversion strategy. So it relies on the hourly RSI being extended above a level. As soon as that happens, it monitors M5 and takes a trade short. Turn that off and it will just take a trade short or long all the time. Yeah, because this is what is filtering out the signals. So if you just turn that off, when you see an opportunity, stick this on there, pick the direction, long or short, and go. That's it. Simple as that. That's what I've always done. That's how I've always used the EA, and that's how I teach in the bootcamp. Use the tools to get you in. I often will take a manual trade as well. So I will go, let's find something that's played out. Euro New Zealand. So Euro New Zealand. So I've missed the entry, right? So let's say, for example, this was extended above the hourly. And I wanted to go short on it. I look at this and I go, oh, I've missed the entry. So what I'll do is I'll basically take a manual trade. Can't see it, but the buttons are up there. I'll take a manual trade short, and then I'll stick the EA on, and the EA will scale me in if it moves against me. If it doesn't move against me, obviously, I will just set my TP and I'll get out in one trade. So I use the EA as a kind of a hybrid tool, if you like, to get me into positions automatically, or if I've taken a manual trade, to automatically scale me in and manage the positions for me. The first trade I take, if it's manual, it won't manage that at all. So I need to take that into account when I'm managing it. And obviously, I'm watching the dashboard to help me do that. But for the last, since I've been running these set files on this VPS, these are set up to take every single entry. Okay, so the reason I set these up was so that anybody that says I'm in whatever with whatever strategy, I can look and go, right, this is the trades you should have on. But if you look at what it's doing, it's consistently banking at the moment, and it's trading every single trade. So sometimes it will get into very high exposure. So it will be long 6 times on the yen, which is obviously not what you want to be doing. However, if you want to use the EA full auto, not have to pick pairs, not have to manually do any analysis or anything like that, you could stick the EA on every single pair. You just have to reduce the risk. So the way that I set the files up is using 0.25% risk on a half an ADR movement as already ADR movement. So entry there, stop loss is half an ADR away, and I risk 0.25% on that movement. So if it pushes down half an ADR, I'm only in 0.25 of drawdown. If it pushes down 1 ADR against me, I'm only in 0.5% drawdown on the account. If you want to put it on every trade, you could reduce that risk down to 0.1% on half an ADR. And that is meaning you could, in effect, take 4 to 5 trades on one currency in one direction and have the same amount of risk on as if you traded 0.25% and you only limited your exposure to 2, which is what I teach in the bootcamp. So again, there's no right or wrong. It's entirely down to you how you do it. But the other way you can do it is, instead of risking 0.25% risk on half an ADR, what you could do is say, I'm going to keep the risk the same, but I'm going to do that over 1.5 ADR. So what you're doing is you are reducing this by 2/3, aren't you? Yeah, so that's probably a better way to do it. So instead of using half an ADR, and all you would do is use the existing set files that I've got published. And there where it says percentage of balance to risk 0.25, use the stop loss true, and the stop loss is being done over ADR. Your ADR setting is 0.5, change that to 1.5, and in effect what that is having, the impact it has is it reduces that by 2/3. So your risk on each individual pair that you put it on is reduced by 2/3. And then you can pretty much trade 6 pairs, couldn't you? On one instrument. There's only 7. Trade everything. You won't get the same results, obviously, because you're using proper, better risk management. Whereas this is why this is banking so nicely. Don't forget, way I teach in the bootcamp, I'm looking to make somewhere between 5 to 15% a month. Some of these set files are making way more than that. Of course they are, because they're trading every single pair under the sun. That's made 20%. That's made 15%. That's made 24%. That's made 10%. If you're going to run 4 different accounts with all these strategies on every single pair with a 0.25% risk, those are the results you're going to get. However, if you get a squeeze on the yen, right? I'm long the yen 7 times on the hedging set file. If the yen screams to the downside, this account is going to go into an awful lot of pain, and it's going to be scaling out a lot and making losses, which is fine as long as you're scaling out and doing drawdown control as you go, no problem. And that's what I'm finding with this, the new settings that I've got, which are doing automated drawdown control religiously every 0.75 ADR, we are getting into a second position or third or whatever, and we're doing partial drawdown control every time we move 1 ADR against us. Yeah, so it's doing it as we go rather than waiting for the profit to build up, and we're getting out of a third of it. I'm finding this is actually keeping on top of drawdown incredibly well at the moment. However, we haven't had any massive squeezes. This is the biggest squeeze we've got at the moment, Euro CAD and US dollar yen on H4. And as you can see, these are only in 1.13 and 0.79 because they've been scaling out along the way. Still managed to bank 15%. So if you look at the US dollar yen, let's find it. Going to be right at the front, aren't you? So you see, that's the first entry all the way back there. So that was your first entry. We've been in it for 1, 2, 3, 4, 5, 6 days now. 4 entries. And you see we've done drawdown control once, twice, 3 times on that position. This one we've done it once. This one we've done it once. So we've scaled out 5 times. So 5 rounds of drawdown control, all closing out a third of those positions. And every drawdown control as a negative is in the region of 130 to 220. So 0.13 to 0.2-ish %. Yeah. So we've lost on this trade so far probably 1, 2, 3, 4, 5. Call it 1. Let's call it 1.5% or something. So we've lost 1.5% on this trade. We're still in it. And look at the average. It's only there. An ADR moved to the downside, and we're back out of it with a 1.5% loss. 6 days, completely wrong. 1.5% loss. However, in the last 6 days, and we've been scaling out on this one and scaling out on the Euro CAD. In the last week, the last 5 days, we're still up. We're still positive 0.5%. We haven't actually lost any money. We've had 2 losing trades, which are being squeezed. Still banking, aren't we? Yeah, and still up for the month. So I'm coming to the conclusion that what I teach in the bootcamp and the way I've always done drawdown control is waiting to bank profit and then using that profit to offset the problems when I have the profit available. Actually offsetting the problems as we go is more effective. So again, might have to redo the bootcamp or something, but that's what the EA is sort of proving, which is great. But anyway, there you go. So that's LB. That's basically how you can use the EA. It's entirely up to you. Everybody uses it in a different way. It's a Swiss Army knife. There's so many ways you can trade with it. So much it can do. Opening range break on the Dow that we looked at is painfully slow. It is still long. Highly unlikely going to make any money out of it today. But afternoon, Tony. Have you tested the auto drawdown to keep you above 5%, or can you set it to do that so it can be used for prop? No. You can't control your drawdown within 5%. If you could do that, you'd do that, would you? Think about what you're saying. Can we force the market, which is completely random and moves at its own will, to keep my account within 5% drawdown? No. If I could do that, I would keep myself in +5 and never have drawdown. I can't do that either. So no, you can't. If you get a squeeze on something, and it squeezes hard and does 200 ADR to the downside, and you've taken 3 positions on it when it decides to do that, there's nothing in the world that's going to stop it unless you close them out. So you could close them out. I mean, you can set the EA, the market reversal alerts EA, you could set it up to do way more aggressive drawdown control. So at the moment, the drawdown control on the ADR set file is set at 1 ADR and 1/3 of the position. If you wanted to, you could set that to 0.75 and 0.5. So it closes out half the position when it's moved 3/4 of an ADR against you. You're going to scale out a lot quicker. You're going to take losses more. Those losses are going to be slightly bigger, but your drawdown is going to be dramatically reduced. But you can only test this on historical data. And historical data isn't going to tell you what's going to happen in the next week, month, or year. It tells you what's happened in the past. So if you can back test something that gives you a low intraday drawdown and back test that out of sample over 3 different periods, and you get similar results, you'll have a higher probability of that producing the same results in the future. But if Russia and China decide we've had enough of the West, we're going to go to war and we're really going to do Ukraine, and Belarus are going to get involved because they've got the short-range tactical nukes, this market condition moving forward for the next 6 months is going to have no bearing whatsoever on whatever's happened in the last decade. All becomes useless. Yeah. If the US defaults on its debt, which it's never done, ever, everything you've backtested in the past, it's got nothing to do with next week, next month. Well, next week and next month is going to happen in the next few weeks, isn't it? Yeah. So you got to understand, all backtesting will give you certain parameters to work within. They will never produce those results ever again in any way, shape, or form. The same. People get different results to me using exactly the same set file on their broker. Their broker's data is different. They're getting different results with exactly the same settings of exactly the same strategy, told to do exactly the same thing, but their broker has different data. Therefore, their reversal alert is in a different place to mine. You're going to get completely different results. It's a strategy. It's formulated on price movement. Price movement will be completely random. So you can never control what your drawdown will be. This week, this month, ADR reversals, I haven't seen it go above 5% this month, and it's banked 10.6. So if you were trading this on prop, you would have passed your evaluation. If you were trading this on prop, I can't say that we got above 5% on this either this month. We might have done. Hedging, you are above 5%. But then again, this is producing the big bucks because it's high risk, it's hedging. You're always in the wrong direction. The whole premise of this strategy is it gets in and out, and it just gets in and out regardless. You are always going to be getting in the wrong way on probably 50% of your trades. That's the whole point of it. You don't know which way it's going. So you get in, you hold on, and you wait, and you get out when you can. So this one is the one. I don't trade this personally myself. I'm really considering it. This has been up to 25% drawdown. But it's nearly doubled the account. So this account started at 100 grand. We are now sitting at, I know, something 132 grand. How long has this been running? March. Is this running from March? No, this is only the last month, sorry. Can anybody remember the date I started this? This is an old account. I can't remember when we started it. Let's just go back 3 months. Let's see. Anyway, I can't remember, but it's done loads, basically. So in the last few months, it's done sort of 60, 70% return. So yeah, it's banking big. But it's high risk. Everybody's got a different risk tolerance. I'm considering running this on a portion of my own money, just because the returns are so good. But I get the feeling at some point it will get squeezed to a point where it will suddenly hemorrhage half of that money back, because you're not using any RSI extensions on this. There's no reason for the market to reverse when it gets in. It could just do whatever the hell it likes. But because you're trading on the hourly charts, the movement and the flow is very, very good. So, but it's not my preference. My preference is H4 and H1, which is what I've been trading for years, and stick to what you know. And we talked to somebody today in Telegram group who's risking ridiculous amounts. He's using the hedging set file on M30, and he had a 50% loss day last week, and we were trying to convince him that he was over leveraged, not interested. But that's fine if he's not interested, and he's made a lot of money, made 38% or something. I can't remember what it was. Made a lot of money in the last 3 weeks, but it will blow the account. But if you're trading prop and you don't care about blowing the account, it's not really a problem, is it? Yeah, 35% return this month, 25% return this week. Really good. But he's had a loss day of 51%. It's more gambling than trading. But at the end of the day, if you're trading prop and you want to use these strategies with high risk, do it. David, got in US 30 long. Yeah. It is off. So let's have a look at where we're going. So propulsion gaps are filling on M5. The hourly move, so there's that propulsion gap fill and bounce on this one. So we're looking to push up into here. Yesterday's high and ADR is absolutely miles away. So if this thing does want to run, it's got a long way to go. You are just coming up into the previous day's low, which is here. Yeah, so that's that level there, previous day's low. So we bounced, slammed through. If that is going to act as resistance, this is where we're going to turn this propulsion gap, exactly where these limit orders. See what I mean about limit orders? Limit orders triggering here. We're getting some selling resistance coming in. You suddenly see price pushing and pushing and pushing, and then it's like boom. You can tell it's limit orders by the speed that candle moves back down. And if you get a sudden like candle that looks like that off of a resistance level, that is the limits triggering, basically overpowering all those buyers. And the only way that thing is getting through that level is if there's more money sitting there long than there is limit orders sitting there short. If there's twice as many limit orders sitting at this level short than there is buyers, this is coming back down again. Where's it going to come to? The last area they broke, where they went long, and they're going to defend. This is why support, resistance and propulsion gaps work, because they're just big areas where there's a lot of money sitting. why the market bounces at them. Can we tell which ones? No. We know that is where the money is sitting. So, but this is a right old mess at the moment, the Dow. Really looks bullish, doesn't it? But not bullish. It's sideways. Totally sideways. Hornalls. Right, that's all I've got. Anybody got anything else they want to look at? Other than that, I will leave you in peace. And then we'll look at tomorrow the Dow, the DAX rather, in the morning. I will keep developing the new version of the EA, see if I can squeeze some more profit out of that in some way, shape or form, and come up with some decent set files for it. But I'll be back tomorrow at 2:20. So overnight news you need to worry about today is New Zealand dollar. So if you've got any New Zealand dollar exposure on, this could go either way tonight. Probably long, assuming we're going to get the 5.5. So this tonight, this takes the New Zealand dollar to the strongest currency out there from an interest rate perspective. Yeah. So we're moving up to 5.5. The last increase was 0.5%. This increase is only going to be a 0.25. So they are slowing down the rate of increase. However, their interest rate is still fairly high. It's up there with the worst of the bunch, apart from the UK. Take us out of the equation. We're just terrible. But it's sitting up there with the New Zealand dollar, the euro, and the Aussie dollar. Rate of decline is good. Unemployment is good. So it's possibly going to be bullish, but we'll wait and see. We've had a lot of New Zealand dollar strength recently, which has waned over the last couple of days. Well, if you look at the New Zealand dollar. So actually saying that, yeah, it has been a little bit more bullish, isn't it, over the last few days, but we haven't really rallied that much on it. So I get the feeling we may well have a last flurry on this. Aussie New Zealand be a good one. Yeah. Pound odds just hit ADR. There's a hit to the upside. Reverse alert is on a bearish engulfing of that candle. So yeah, Aussie New Zealand is definitely going to fly. But with the interest rates at the moment, we don't seem to be doing what we expect. We had the euro rate increase, and the euro's tanked since then. We haven't recovered at all in the euro. Same with the pound. So if we do get decent rates, that is what we should see. We should see Aussie New Zealand dropping, but I don't know. It's very difficult to tell in a minute. As I say, because we're getting to these terminal rates, the New Zealanders haven't actually said anything about terminal rate. They haven't even mentioned the word terminal rates, have they? They haven't said we're going to stop doing interest rates. They just keep doing it. Same with the Aussies. They had a little pause. Aussie collapsed. So then they went, whoops, sorry about that. And then it started rally again. So it's difficult to know what's going to happen with it. But we're expecting a 5.5. Assuming as we get that, should have a bullish move off of it. But wait and see. So if you've got anything on New Zealand dollar wise tonight, so if you look at your P&L tonight, I've got 2 New Zealand dollar exposures on, both of them short. So if you look at this tonight, before you go to bed and go, right, well, I've got 0.8% there and I've got negative 0.9% there. Bank it. Worst case scenario is that you would have made more on it and that one goes into profit. Yeah. Worst case scenario is you lose all of that and that goes deeper into drawdown. So if you've got something green ahead of a major news event, it's up to you, obviously, and what risk you've got on and how much profit you've got. But it makes sense to put that into realized profit. Might as well take that $100. It's the difference between taking $100 or taking around about $500 for the sake of potentially being in drawdown for 2 days because the New Zealand dollar's rallied like a nutter. Just bank it. That's what I typically tend to do. Although I haven't got a lot of, got 1 New Zealand on at the moment. That's it. And it's not in profit because it's New Zealand dollar Swiss. So up to you, but be aware of it. it's coming out tonight, and then we've got the press conference. So if you are up for this, New Zealand dollar press conference is where you're going to get the movement. So you'll get a spike off of the interest rate, and then the press conference is where they're going to give the forward guidance. The forward guidance is what drives the market forward over the next month to quarter. So that's what we're interested in, 4 o'clock, that move. And then tomorrow morning, before we come on, we've got the inflation figures for the UK. Wow. They are forecasting an 8.2. That's not going to happen. I think we'll probably get a fairly negative move on the pound tomorrow. There's no way we are going to do an 8.2. So they're looking at a 2% decrease year on year after not actually managing to get anywhere near it ever in the last 6 months. Likely, innit? You never know, though. So pound tomorrow, probably down. Euro pound, we just had ADR. Pound is strengthening up. So we've got a rally in the pound at the moment. I don't know what that is, but it's got a rally in the pound. All right, so I'll leave it there. Can you tease us some more with the new ORB before you go? You really want me to tease you more with the EA? No, I haven't even got it up there now. My God, what's it called? I don't even know what it's called. There we go. Tell you what we'll do. Let's not do that. Let's do the more fun one. So let's not do visual mode. Let's just watch the graph. Ready? Let's watch the money. This is much more fun watching the money. Money. More money. A little bit less money. More money. More money, but more money. A little bit less. A little bit less. A little bit less. That's not good. More money. More money. More money. More. This is 3 months. 36 grand. 41 grand. I don't even know what settings I've got this on. 46 grand. There we go. 46 grand. 3 months. Job done. Work in progress. Right, I'll leave it there. Pound is really flying for some reason. Nice big strong push on the pound, especially against the Australasian pairs by the looks of things. Oh, pound New Zealand's just banked. There we go. Pound New Zealand literally just banked on that rally. Oh no, it didn't. It banked. Well, banked in the last hour. Right, have a good one. I'll be back tomorrow morning, 7:50 and 2:20 tomorrow afternoon. Just slap Lambo in the title and you'll sell $1 million. I don't want to sell $1 million. I want to make $1 million. But the drop in UK inflation rate due to energy dropping out of the figures, hence the big drop. Has it dropped yet? This is year-on-year figures. I'm not sure there's enough to warrant that drop. Might do. Okay, so yeah, it might do. Don't know. Either way, probably negative pound, I would imagine, but we'll see. Anyway, we'll see tomorrow, won't we? When we come on the live room at 7:50, that will be out and we'll know. All right, so have a good day. Anything you need, let me know. I'll be in the Telegram group. I'll be back tomorrow morning, 7:50, tomorrow afternoon, 2:20 as usual, and I will see you guys then. Have a good day.